Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there, just to let me know that it is indeed working. Hope everybody's had a fantastic morning so far. Just want to welcome everybody here. I want to extend a warm welcome to those of you that are new with us in the program. Let us know what state or what country you're from so we can welcome you here. Awesome, but let's go ahead and jump into this. As always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. Okay, guys, so let's go ahead and update our COT report trades, and then we'll jump into price action trades as per normal. So as of yesterday, we were up 51 pips across 6 different COT report trades. We saw some, last I checked, we saw some improvement from last night. So let's go ahead and update that. So yesterday we were up 5 pips on the pound yen. This morning I have, let's see, where's that? I guess I'm only up 2 pips on that one now. So that's kind of funny. So I guess not so much improvement on that one. Pound dollar, I was up 6, now I'm up 5. So again, that one not so much. But then you've got the franc yen, which was down 10 yesterday, and now it's up 45. USD franc yesterday was down 5, now it's up 26. NZD yen yesterday was up 32, now it's up 87. The NZD dollar was up 23 yesterday, now it's up 60. Okay, so that's where we're sitting at right now, is a total of 225 pips unrealized across the 6 different COT report trades. All of them are in the money right now, some of them barely, and then others are doing pretty good, like the NZD yen and NZD dollar. Those ones are guaranteed wins this week, just because the trailing stops have moved up in such a way that you should have that one above break even now, your trailing stop. So that's good news, right? So obviously we'll leave that alone and let that do its thing. So that's exciting. Yeah, yesterday we were up 200, or we were up 51 pips or 52 pips. Now we're up 225. So that's awesome to see. In the past, how does FOMC affect the COT report? It depends. You know, some FOMC meetings, it's it's a big deal, and other ones it's not. It's usually a big deal if things go against the expectation. The expectation right now is that maybe there's a rate hike, maybe there isn't. But the idea is that they're going to kind of slow down the rate hikes, right? So at least that's been the consensus. We'll see how that actually plays out. Um, I trade through them. If it really makes you super nervous, you could, I guess, close your trades. I don't. I mean, I'm not going to. I'm going to leave my trades open and just trade like I normally do. But if it is something that makes you really nervous, again, you guys are the kind of the ones in charge of your own trade setups. So, do what you feel like you need to do there. For me, though, I'm leaving them. I have a stop loss ready to go if things don't go right. I've trailing stops on other trades again that are ready to go on those ones that have moved up enough where the trailing stop could kick in if needed. So I just continue to do what I do, and let those trades do their thing. Um, but yeah, we have FOMC meeting here in about a little less than 3 hours, so we'll see how that plays out. But yeah, that's how it is with the with 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 a lot of these trades. Through news events, we just leave them well, especially with the COT report, we just leave them alone. We are going to take some trades this morning, or we're going to at least look for some trades. I actually found a couple I like, so we'll kind of look at those. And most of them are non-dollar pairs, so hopefully if we see volatility on those non-dollar pairs, it's going to be more of um, a short-lived volatility. In fact, maybe we can even use that volatility to kick us into a pending order. We'll see. But that's a great question. So yeah, a really great question. But yeah, like I said, I'm going to trade through this. I'm still hoping for a fantastic week, no matter what FOMC does. We'll definitely see how that actually affects our trades. But yeah, I'm looking forward to letting this kind of play out. Yeah, so far so good. It's a plus 225 pip week. I'm still waiting for a week where we can get 5, 6, 7, 800 pips. We haven't had one of those in a while. It's been a little bit of a drought, to be honest, recently. We've actually done a pretty good job hanging in with the market. We've had some smaller losses, and some smaller wins. We've just kind of hung with the market, and I'm just waiting for our turn to really take off. One of the things I see happen, and then I'll move on from this, is I see a lot of people start the COT report. The moment they have a losing week or two, they quit it, and then they're like, I'm just going to watch it for a while. And then boom, massive weeks come on in. They get COT report has a 10% in a single week type of week, 8% in a single week, back to back type of thing. And then they're like, okay, now I'll trade the COT report again. And it's like, you missed it. You missed the whole opportunity, right? Now you're gonna have to wait another month or two for that, next rally to come in, and likely you're going to hit some losses just like you did last time, right? So the COT report is really the way you're going to make it work is longevity, is sticking with it, and putting in your stop losses, using the trailing stop, putting in your lot size calculator, using that correctly, and having the grit and tenacity to just do it week after week after week after week. That's where people really grow out of this. Now, I'm happy. I get lots of new clients when we have a fantastic week with the COT report, and I'm more than happy to teach them. And I get even returning clients that come back after a great week with the COT report. It's just too bad because they don't believe me until they see it, and it's like, oh man, here's that big week, and I missed it, right? And we are due for some weeks like that. I'm confident either this week or next week, or sometime in September, we'll get a week like that. October is definitely going to have a week like that. November is going to have a week like that too, or maybe two, because historically we always have. If you go back and look at all the Octobers we've traded, all the Septembers, all the Novembers we've traded, there's always been an 800 pip week or so, or two. Sometimes we've had more than that. And it really stink to miss out on those opportunities, because the whole goal is to wait for those. And then in the meantime, if it's a bad week, keep them like last week. minus, or the week before, minus 117, or keep it like the week before that, minus 200. And then when you can hit that 800 pip week, it's like, oh, I see why I'm trading the COT report. That's why. It's like, because you will have weeks where you make 8 or 10%, 11% in a single week. If you trade it this way, it's not going to happen every week, but you will have those weeks coming. So anyway, we'll just let those sit, and they're the things. There's really nothing you can do, because you just let them go. If they're winning like this, like they are, again, there's nothing you can do. You just have to wait until Friday to close them. Okay. Which, by the way, especially with your winning trades like your NZD yen and your NZD dollar, sometimes you look at those and you're like, oh man, I want to close that, right? And I know the feeling, but you can't do it, okay? Because we've had weeks where, and this happens a lot, where you have a trade where you're up 87 pips on, like this one on Wednesday, but if you were to have waited till Friday, you would have been up 200, 250 pips, right? I'm not saying it will, it just happens enough that it wouldn't be worth taking that profit. Okay. Plus you have a trailing stop in there. So if things do go south, that trade I know for a fact would indeed hit the trailing stop in the money. Okay, so let's kind of go over and talk about price action now. Let's jump over here. Um, yeah, those are fun weeks, aren't they, Jill? Yeah, woken up on Fridays, and having your numbers double overnight. Yeah, that's awesome. Okay, so let's talk about the trade we closed this morning. So let's look at the 0 pound. I may have closed this a little too early, but I saw this market. It basically came up to our original target, and then pulled back from there. I was kind of surprised. I thought it was going to bust right through that. Um, I thought it was going to bust right through that zone, and then actually go up into this area, but it didn't. That's okay. We still made money on this trade. Just curious, let me know in the chat box how many of you were able to catch this trade. How many of you actually took this? So this trade, I ended up closing for plus 16. I think if you were still in it, you'd be up about 22 pips. So maybe I did close a little early. That's too bad. But um, got this. So yeah, so let's kind of break this down again, because this is what we're going to try to do today as we look for more trade setups. Okay, so this is working pretty well for us. So as far as price action goes, what we're looking for is a price action that's starting to move in a specific direction. And we want to find sentiment indicating that retail traders are piling into that direction, or I guess in the contrary direction to where the market's going. So for example, with this one, overall, this was starting to head up, right? Wasn't it? It was starting to go up here. And what did retail traders start doing when it got kind of into this area over here? Well, they started piling into these um, they were selling. Why do retail traders sell? What causes them to get into such uh, a sell position like they did? Well, when retail traders see the market begin to march up, in fact, let's kind of do an example here. Let's actually turn off these order block indicators, and let's just kind of put on a naked chart, and let's delete all this stuff, and let's do a rewind. So I would say about right here is when I saw the retail traders really pile into shorts. Now, why? Why did retail traders start piling into shorts right around here? Because they saw the market going up and they're like, oh, let's put in a sell. So what they do is they put in a sell right here, and then they're hoping it goes down. And then inevitably the market actually goes up. So it comes up to here. They add more sells, right? They add more and more sells throughout this region. And now they're in a drawdown. Okay. And then what do they keep doing? The market goes, they keep selling, and then the market goes up again and they sell again, right? So that's kind of what retail traders do, is they're trying to find the top of the market. And so they basically extend and build into a losing position as the market continues to. How many of you have done this? I mean, I've done this. I mean, you don't need to tell me in the chat box, but many of you could relate to this trading style because this is the kind of natural way to trade if you don't have any experience. Okay. So if you're brand new to trading, this is just kind of how just somebody is pre-programmed to come to the market and just trade this way. And they don't even know it. They don't even realize that this is how they're kind of trading. So that's the whole goal of a trader is they don't want to lose on their trades. So one of the things that they do to not lose is they just add to their losing position in hopes that that losing position turns around and then they can actually make some money with it, right? So they sell here, oh, it goes up more, sell again, goes up more, sell again, goes up more, sell again. And then that's how they get into these really bad spots, okay? So obviously, retail traders must be suffocating on this trade, and we can tell because when you go and look at the sentiment index, let's see where they're at today. Yeah, 79.3% of retail traders are selling the euro pound. That's with FX Blue. If you look at my FX book, let's see where they're at. Yeah, 78% versus 22% are selling the euro pound. Why? Why is that? It all comes down to trying to find the top of the market. So this is how a trader will trade. So what do we do to take advantage of this? Now, sometimes retail traders get it right. We talked about this topic, right? Sometimes they actually, when they're selling, that selling is justified and it makes a lot of sense to sell, but it's very rare and it's usually after a lot of pain and it's usually after a lot of um, uh, drawdown where retail traders have had to uh, they've had to figure out what to do with their position, right? Some of them are lucky enough to be able to not be margin called out. Oh, which by the way, this type of style is when you hear about people blowing their accounts and getting margin calls and quitting trading for the rest of their life, it's because of this. Okay. Some of you may have done this and have lost a lot of money doing this. And I'm sorry if you have. We're not going to teach you. I'm not going to teach you how to do this. I'm just showing you that this is what they do. And that's what creates this phenomenon. But when you hear about your buddy or your friend at lunch who says, oh, yeah, I lost 5, 10, 15, $50,000 trading, it's usually because of something like this. Okay. Um, okay. And so we can't trade this way. In fact, we want to kind of do the opposite, to be honest. Now, like I said, retail traders eventually they're not always going to be wrong. Like sometimes they're going to get it right. So when are they going to get this right? Because they're trying to find the top of the market and the bottom of the market. And inevitably the top is coming and the bottom is coming as well. So when is that? Well, often the market will find a top or a bottom around liquidity zones. Okay. So if the market, like for example, when we started buying, which was in this general area throughout here, um, was the market at a significant liquidity? It was not. So what's the chance of the market to continue against the retail trader? The chance is very high. It's very high that they're going to continue to go against the retail trader because the markets come and go by liquidity. They stop and go by and for liquidity. It's always by that, right? And so this was not a liquidity. In fact, well, it was over here. This was a little bit of a liquidity zone, but it had already been tapped into through this move right here. And so we knew that this zone had already been mitigated by that move. And so when the market came back here and retail traders were that short, we knew that there was a really good chance that this was going to break out right here. And sure enough, it did. And the retail traders got burnt pretty badly on that move. And fortunately, we were able to make some money on that. Not a lot, but that's the concept. And that's what we're trying to do each time we take these trades. Okay. All right. So that's what we want to do as we look for opportunities here. Um, as we look for trading opportunities this morning, we want to look at the sentiment and we want to find out, okay, where's everybody trading? And we want to find out if their move is justified or not. And if it's not, then we want to continue to trade against them. If it is, we might actually trade with them, but it needs to be a pretty good setup. And usually I want to find a break of structure first to go with them. And I'll show you what that looks like. We actually want to see like if we're going to go with these guys, we need to see that the market's actually starting to turn and the price action is showing us that. If it's not, then we don't want to trade with them. Okay, so one of the trades I was looking at this morning is when you actually look at this here, one of the top currencies I believe is the pound Kiwi. Is this the one I was looking at? Let me take a look. I think this is the one. Yeah, it's been down a lot today. A lot, a lot, a lot. And I believe it's doing the same thing over here. So let's take a look. Let's find the pound Kiwi. Let me know if you guys see it. I'm not seeing it yet. It should be in here somewhere. Maybe I skipped it. Where is it? You can't alphabetize this, which is kind of annoying. Maybe I don't have it in here. Maybe I don't. Let me add it. You can add it actually if you just go here and look for the pound Kiwi. Unless I skipped it. There it is. Yeah, I didn't have it in there. Dang. Okay, so now we got it added. Let's see where it added at the bottom. Okay, yeah, so the pound Kiwi's at 87% long, right? So retail traders are trying that obviously just by looking at that without even looking at the chart, you guys can tell me right there that that's a downtrending market, a pretty significant downtrending market. Why? Because if that many retail traders are buying, then they're trying and they su subconsciously try to find the bottom of the market, then you know that they're buyers right now and that the market's going down. Okay. So when we look at this chart, sure enough, it's just getting demolished, right? Like this is a bad, bad time for the pound Kiwi. Now we got to find out, is this move justified? Like not this move, but is the position of the retail traders the right thing to do? Like are they actually right about because the retail traders they want what do they want? They want this market to go up, right? That's what they want. Okay. Because obviously 87% of them are buying. But is that actually the case? Is the big question. Um, and is that actually justified? How do we find that out? Well, you can run a liquidity analysis, right? So you can go back here and find liquidity zones. So when I come back to this market over here, what jumps out to me is this general area right here. Um, basically whatever took place in this area down here, specifically this guy, is what ultimately caused this breakout. That's the beginning of a leg to the upside. Has the market gotten there yet? No. So there's probably some more selling pressure. And how much is that? I mean, just from my first glance, you can see that there's another 50 pips to go before that thing hits liquidity. And then we might want to actually go long, at least consider a long position at that point. Um, okay, what else? What else can we do? So you can pull up Sonar Lab, which Sonar Lab has liquidity right where I have it, right there. So Sonar Lab is saying, yep, we're at selling pressure right now. There's no liquidity until here. Let's pull up the order block detector. Order block detector actually says there's more down here, not so much in here. Smart Money. Smart Money doesn't have any order blocks on here on the hourly. Okay, so we can try different time frames though. Okay, so yeah, it's mostly tied up in here, and they're actually saying it's a little bit lower even. Let's try a 3 hour. Um, yeah, this is mostly it right here, and then obviously way down here. Let's try a 4 hour. Yeah, it's mostly right here. So let's go back to the 1 hour time frame. Actually, I'll do the 4 hour again, and then this is the area right here is our zone. Okay, so now let's go back to the 1 hour and let's go ahead and remove all this stuff. So we haven't actually quite hit that zone yet. We've been pretty close, but it hasn't quite hit. I don't know if this is the best opportunity, but what I'm trying to illustrate is that this is likely to go down another 50 pips before it gets any better. Yeah, something like this would be the idea. Maybe more. It could actually go down more, but we don't know that. But I wouldn't be buying this until then. But when could we buy? Well, we might actually place that trade. So when are the retail traders going to get this right? Well, they have a pretty good chance of actually there should be a bounce right here. So you could actually place this trade and look for a bounce. You know, you could buy there, but none of this has been a good. This is a terrible area to buy, obviously. All of this has been pretty terrible. And if they were to have done their homework, they would have found out like, hey, you don't really hit liquidity until this area, right? So we might have two opportunities here, one to sell for just a little bit, and then one to buy when it actually dips into that liquidity zone. Okay, that's kind of what we're looking for. Now, like I was saying earlier, what I like to do is, I mean, I can trade it this way, but what I'd like to do is see this actually come down, hit this zone, and then break up from there. So like if it broke up and broke structure, then I might actually buy that after it breaks structure. But this is not it's not a terrible way to do it. So we could do this one. But let's I do want to see some other opportunities before I just jump into something. Um let's see what else is lining up. Let's look at that pound CAD. That's at the top of that list. Let's look at the pound CAD. Okay, so with the pound CAD, obviously it's been coming down significantly as well for a while. We actually caught a lot of this, if you guys remember. Now, is this justified? You know, is this about where the market's supposed to break up? Let's find out. So if we go back in time, you can see it looks like there's a little bit of a liquidity zone right here. There really isn't anything now until you get down into like maybe this area or even down into this area. So it's like, wow, if this thing breaks down, it could go very, very far. Um, let's pull let's pull up the order block indicators and see what we're talking about. So yeah, you can see this area lights up a lot, and that's kind of what I was leaning towards. Looks like they don't like this one, so I'm going to delete that one. And yeah, this area is a liquidity zone. You can see that area lights up. There's 2 or 3 blocks inside there. And that's where the market's holding itself up at the moment. If that area breaks through, like I said, this thing could just, oh my gosh, it could just keep on going. Because yeah, I mean, when you go out to the higher time frames, look at this. So let's go, here's a 2 hour. That liquidity is not until here. See that? Like if that area breaks out, it's gone. It's just going to keep going down. So you can see this area is holding for now, and I wouldn't sell here. The only way I would buy here is if it broke structure to the upside, and I'll show you what that looks like in just a second. But yeah, um, yeah, so this is it. So basically, if this area holds, then it's time to buy. If this area doesn't hold, then you're selling all the way to there. If that area breaks through, then you're going all the way to there. Okay. So that's how you should look at this market. Because there's no reason the market should stop here or here, like, you know, along this move right here. It shouldn't stop there. It shouldn't stop here or here or here. It should stop on this, right? That's where it's going to stop. If again, that's if it breaks through. Which it really could. But we don't know yet. We just don't have enough information. Um, this one I hate to speculate on, but let's look at the 1 hour. So here's how I would buy if I were to be a buyer, because let's say this area does hold. What I would want to see is something like this. So instead of just buying right away, because you could get yourself in a heap of trouble if you just bought right away, um, is wait for it to break some like structure like this. So come above, if this market broke above this resistance here, then you could wait for a little pullback and then buy on that little pullback, and then it's off to the races from there. So that's one way you could trade that. For me, I'm going to be patient on this one. I like some of the other trades we have better, like that pound kiwi, better than this one. And I'd feel more comfortable buying that pound kiwi than I would this pound CAD. So just so you're aware. So let's look at some of these other options. So let's continue down that list. You got the USD CAD, which is also extremely bought right now. If it's extremely bought, what does that tell you about the USD CAD? It's probably going down, right? Without even looking at the chart, I can just tell you it's going down. Um, right? So where's this guy in relationship? So is this a is this a justified move to the upside, right? So retail traders are buying this. Are they justified? Well, let's find out, right? So here's this hourly time frame. There's several order blocks in here, so maybe that matters. Let's try going to a higher time frame. Yeah, lots of order blocks in there. So I wouldn't be a seller right now. I would be if it broke through this. If it broke all through that, then this thing could just keep on going down into here. Yeah. Yeah, tons of buying pressure right there. So I would say the USD CAD actually might you could actually see that break out of there. Um, yeah, I'd be a little bit nervous with that one. Um, yeah, so I wouldn't touch that one. Just so you know, that's just gives you a little something to think about. Okay, so we have the pound Aussie now. Let's take a look at the pound Aussie. That one's also extremely bought up. Let's pull up that one. Wow, look at this guy. Just slicing through these areas. That's interesting. So that's not a good sign if you're a buyer. It's terrible. Like a better sign if you're a seller. Let's go to here, let's turn off some of these order blocks. Let's just keep a few of them on here. So you got a block here. Let's try a 2 hour time frame. Yeah, maybe I mean this is we'll see. That area is kind of strong, so maybe it'll break out of there. Um, the 1 hour though suggests that this isn't really strong liquidity until you get into that area. So this one, pound Aussie is almost saying, hey, look, we've got more to go. Like this might actually continue to break down. We will see on that. That's interesting. Yeah, we could definitely see that continue lower. Hey Darwin, how do I identify swing high and swing low? I think it just depends on the time frame that you're on. So like if you're a- and TradingView is not very good with this, but because with TradingView you can expand out your chart like this, and all of a sudden you got way more candlesticks. Or if you zoom in like this, you could do that. Usually swing high and swing low it, is based off of the most recent change of character. So if the current trend is to the upside and the character is upside, then you're looking at the swing low um, of when that started and the swing high of 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 that current move, right? Um, yeah, I guess that's the textbook way to do it. But there's a lot of people that do it a lot of different ways. Some people don't really care about that change of character. They're just looking at on their charts, they're just saying, well, that's the top of the market and that's the bottom. That's another way to do it, but it's not necessarily a textbook way of doing it. Okay, so with this pound Aussie, it's this one's hard for me to like jump into because both for the buy or sell, because I could see this one where this is the area that works out in the end for the buy, but this is a strong buy zone right here. So we could actually see the pound Aussie break up from here, but I'm not willing to do that because it does appear that there's room for this to still drop too. So I'm a little bit nervous about jumping into that pound Aussie. So I'm gonna again move on. Again, the best thing I've seen so far is that pound Kiwi. So I'm just gonna move on. Pound Franc, let's also take a look at that one. See if we can get some more information. Okay, so this guy is definitely at a support zone, but let's try these higher time frames. Okay, this is interesting. On this 3 hour chart, this is saying that liquidity is not until here. Like there's more room. Plus, you've also got this head and shoulders right here. kind of indicating that the market's pretty bearish right now on that pound franc. Let's try a 4-hour time frame. Let's see if there's more. Yeah, so this is saying there's more room to drop. Um, yeah, interesting. Okay, so let me try some of these other indicators. Yeah, so this is interesting. It really bounces in this area. It does look like it's more, it really does look more bearish than bullish right now, though. So, I could definitely see a scenario where this, not just a scenario, but I see this breaking down a little bit more. Maybe not as good as I think it's not as obvious as the pound Kiwi. But it is also good to see that this correlates with our analysis over there. So let me go and so that could be a good short-term move to the downside. Pound franc short. We already looked at the pound Kiwi. Let's look at some of these other ones on the other side. So we looked at the Euro pound already. We're kind of done with that trade. We already made our money there. The Aussie yen, let's see how that looks. So these ones are most likely going to be uptrending markets, right? So here you go. So here's the Aussie yen. This guy is breaking structure right here, which is good. That's a good sign. And is it early? That's the question. Well, I can tell already that there's some liquidity right there, and then there's probably this is the liquidity zone right there. So perhaps there's more to this move. Let's see if we're right. So yeah, Sonar Lab is saying that there's two zones up here. Order block detector, yep, has zones up there, and they're not close by. Smart money, yeah, it's all up here. So that's a good sign. That's on the 4-hour. Let's try 3-hour. 3-hour does have order blocks though nearby, but it's not like a concentration. And there's still a ton of buy blocks down here. So makes me think that there's more to this move to the upside. Yep, and right here on the 2-hour, where's that concentration? It's here. Let me actually delete all my stuff here. That concentration appears to be up here, not even right here. So this guy probably the Aussie yen probably has another, I would say 80 pips to go to the upside before you get your move down. Um, yeah, hourly chart. It says technically we are at a order block, sell block there, but where do you have a large concentration? I would say up here, maybe right here, potentially. But this is probably um a little bit better than some of the other ones we looked at. I would say I like the pound Kiwi still a little bit better, but this is good. So you don't want to sell this one right now. That's what I'm saying is I think a sell is a bad idea. This is probably going to just continue higher until about up into here is when it'll slow down. And even then, if you go back to that 4-hour chart, um, 4 hours saying that honestly, it might go there, right? That's what the 4 hours saying. So, and also just on a side note, look how many buy blocks are in here. You can't even count them. There's probably 24 buy blocks right through here. So that just barely got started. Why in the world would now we see this, you and I see this, but why would a retail trader sell this? There's just look at all these buy blocks right here. That's just the banks bought this up not for the purpose of just coming to here and stalling out. No, that they're in the middle of their dirty work, right? They're in the middle of sending this to the upside. So this is a good one. I mean, if you could find a dip buy on this, if you could find a way to buy a dip here, um, which we will try to do that. But the short-term move is to continue buying this. And actually, it looks like from this perspective on the 4-hour time frame, this honestly is probably going to go about 180 pips before it's done. That's got another 180 pips to go because I'd honestly ignore this buy block right here. I'd ignore that. This appears to be the area that of interest, that one right there. just above. And where do you think most people are going to put their stop losses on their sells? Probably just above this spot, that pivot right there. So that makes even more sense for the market to try to, I bet you that's where the banks have their eyes set, is right here. I think that's where they want to go um on that Aussie yen. Okay, so I really like this one a lot too. We might go with this one, or at least try to find a way to get into this one. Um, either at market or through a pending buy order. But yeah, that make no mistake, that one definitely wants to continue higher. Definitely. Yeah. Okay, maybe we'll look at maybe one or two more and then we'll kind of make our decision on what trade we want to take. So let's go back over here. So we looked at the Aussie yen. We already have a trade on the euro yen, I believe. That's one of our caught signals. Right? Didn't we took the euro yen this week for a caught trade? So I'm not going to try to. Oh no, we didn't. That was last week. But yeah, the euro yen would make sense. So let's take a look at the euro yen. Um, okay, so let's take a look at this one. This one has a lot of order blocks in here. Wow, that's crazy actually. Let's go to the lower time frame and let's see what's going on here. So this one's kind of in a bad mix. I don't like this a lot because yes, you do have a lot of buy blocks here, but you also got a ton of sell blocks. Whereas versus like that Aussie yen basically had no sell blocks until 180 pips, especially on that 4 hour chart. Like it had the green light just to go, 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 go. This one doesn't, right? Um, because here on the 4 hour, the higher time frame, you've got this battle of tons of buyers, but also tons of sellers. I hate that kind of thing. Why would you trade that kind of thing? Because, you don't have that green light to just, I mean, in all likelihood, this will probably follow suit with the Aussie yen, but I don't want to speculate that when it's not as good. Why would you take a inferior trade, right? If the other one's going to be just as good or probably better, actually, right? So skip that one. Let's look at maybe one more. And I'll probably go. I mean, you could spend a lot of time looking at different trades here, guys. You really could. But I don't know if it'd be worth it. Let's go to the CAD yen. We already have a trade on that NZD yen that we're making money on, but let's go take a look at the CAD yen. Okay, this is good to see. So this one is breaking structure. You can see right here, broke that high, continues higher. It did find some liquidity here on this 4 hour time frame. Let's see. Yeah, there's some selling pressure here. I wonder if that'll continue beyond this area. Why is it? Oh, it's because of this, but I don't think this might even be at a let's go to I'm just gonna quickly check the daily. Yeah, this is at a high that hasn't been touched in a while. In fact, the next wow, on the daily chart, just real quickly, the next area is up here. So again, that could go a ways too. A lot of these are lining up that way. It sure seems that way, doesn't it? Like this guy could go 400 pips on the daily before it pulls back. Just kind of looks like it's gearing up to break out. Um, the last time it was over here, oh my gosh, you have to go back a long time. Yeah, I don't even know if that's liquidity at that point, going back that far. So this is at a, and I don't want to speculate something I mean, you look at this and look at all these buy blocks here on the hourly time frame. These are all buy blocks. So obviously the banks have an interest to send this higher. Um, this is a great definition of a great dip buy. Trying to buy dips is probably a good idea. But yeah, I mean, I don't know why you'd sell this. Why would you? Like there's no this entire thing, this base right here was created to as a platform to send the market higher. So why would you sell this right now? It's like one of the worst anyway, I used to be that guy. I used to be that guy that would just, oh, it looks like it's high, I'll sell. No, no, no. That's definitely going to break up. I just hate to I mean, I hate to speculate on this one because the last time the market was at these highs, you have to go back a decade. So I'm not going to go on this one, but I'd rather take that same trade on the Aussie yen. Whereas over here, I do have a record and I do have a, like if I go to that 4 hour time frame, I do have recent history of the market actually being at these levels. Okay. I know the 1 hour time frame probably does have lots of order blocks right stashed through here. I'm not too worried about those because the overall order blocks are up here. So I'm either going to go with this one or this one and or the pound kiwi. So let's go back to that one again. So what do we have over here? This was the first one we looked at. So what we like about this one is pretty much any time frame you go on. We were just trying to find out, like here, let's actually go back to, was it on hourly? Was it? Yeah. Basically, this hasn't quite hit a liquidity zone just yet. In fact, I think you could probably try to demand this market. So like if you sold now, if we were to sell here, which is pretty good, you could ride this to about here for sure, but that's only a 1-to-1. So I don't know if you're going to get a lot of money out of that. We're actually kind of late, honestly. It's too bad. But I mean, you could maybe try to send it a little bit further, like to there, and maybe try to bring the stop loss in so you can get your good risk to reward. So something like that's closer to 1 to 2.5. We could do that. And we could look for a buy as soon as it hits that area. But I honestly could see a scenario where this goes down to here, guys, because I don't know how strong this area is actually. Let me go back to the 2 hour again and some of these others. Yeah, if you turn off Sonar Lab, just the order block detector is saying that this area is solid right there, and we're not even there yet. So you'd have to go to there, and let's try, where's the 1 hour again? Yeah, 1 hour doesn't even have one until down here, which is quite a ways to go. And then let's try the 3 hour. Okay, 3 hour does have one right here, so somewhat close by. That hasn't hit yet. And the 4 hour does have one right here. So yeah, I don't know. I mean, like I said, you could at least squeeze out 50 pips out of that to continue to sell. It's not done coming down yet, but I don't know. It doesn't look as good. So maybe I will go with, I mean, like I said, if you want to get a bonus trade, take the bonus trade, and maybe I'll throw that one in the free signals channel, the pound kiwi. But this one's probably the better one, so maybe we'll go with this one. Um, yeah, this is the best one. This is, yeah, this is definitely the best one because you have a recent break of structure. You've got all these buy blocks in here. Um, I'll give you two ways you can trade this, guys. So, and we might post both, but obviously this is a buy. So you could buy now. So you could put in an entry here. You could stop out below these order blocks right here, and then you can ride this all the way to that zone right there. That only gives you a 1 to 1 or a 1 to 1.3. If you bring this up, you might be able to get away with this, and that gives you a 1 to 2.5. And I think you probably will get away with it. Another way to trade it is we could wait for this to dip a little bit. Let's see if we can find some order blocks that are nearby here. Yeah, it's just not, it's just taken off so much. Like you could wait for it to dip to there perhaps, still target up there, and then that gives you a 1 to 3.4. I hate to miss these trades, so I am going to take an entry at market. So I'm going to go ahead and just take an entry buy, but know that my risk management's not super great with that. Like this is not the best RR ratio. So feel free to, and I might post an extra trade on this too. I'll give you two different options. So maybe I'll post two signals, but if this does dip, do want to buy those dips. Definitely. Definitely want to buy those dips on this one. Um, so if this is not the greatest price to buy at, then we will buy in those dips, but feel free to just go ahead and ride this one up. This is a pretty good trade otherwise. So you got a little break of structure going on right here that's pretty recent. So we'll go ahead and just mark that down. I'm still trying to debate this though. Do I want to bring that in? If I bring that in, that helps with the risk management. But the thing is, if it hit that stop loss, then I'm just liquidity. I'll turn into liquidity because where my stop loss is a great place to buy. And so I'd hate to stop out there. And it's not likely to come down this far. So that's kind of my dilemma, um, my thought process, if that makes sense. And I don't want to wait necessarily for it to pull back because it might not. This is so good, it might not pull back. It might just continue higher. That's the problem. It's like the opportunity to get your best buy was down in here, and we just don't have that as an option anymore. I'm just going to mark up a few other things that I'm noticing right here. So this is a little bit of a reverse head and shoulders pattern going on down here. Um, yeah, I like this otherwise. So let's go ahead and post it. Yeah, this one has the clearest runway. Like there's more room for this to rally. And it's still early in the move, so I like that. And then the other thing that I like that I mentioned is that there's a pretty good chance that if this market has a dip, those dips could be really good buys with way better risk management. So that's why I'm saying don't treat this as just a single signal because the other buys you can get out of this are really, really good if it does pull back. Oh, that looks good, guys. I like it. Yeah, and that's cool because this trade has the potential to make us 182 pips. It's a pretty good one. And like I said, I would totally place another trade down here. So there's some order blocks that look pretty good, especially right here. Like, well, that gives you, if you can get that one, that's a 1 to 7 or 1 to 6.5. So that's a good area right in there, just below, just above this resistance, but also just right nestled in that little base right there before this thing pivoted out right here. That is great liquidity. And the issue is, can you get it though? If you can get it, fantastic, but can you get it is the big question. But yeah, so look, I would look for dips in here though, but this is the overall trade that I want to make sure everybody captures is this move. And I'm excited about it. So, and the retail traders are about to get burnt even more. Like I said over here, they're 76% short. Terrible timing on their part. This is going to continue to rally out of that. And when you look at over here, let's see how they're positioned on this is with my FX book. And let's see, I'm trying to find it. Do I not have it on here? Oh, there it is. Yeah, they're 83% short actually over here. So like I said, I do see more pain coming to these guys. Definitely see more pain coming their direction. So all right, guys. Well, I think this is a pretty good game plan. Obviously, we'll leave our COT report trades to do their thing. We've got this trade going. I might post another trade on that pound Kiwi. I don't think it's as good, but it's still a solid trade. So, all right, guys. Well, I appreciate your attendance today. Thank you for coming. Oh, we're gonna do COT report tonight. I need to check. I think I had something tonight that I need to be to, so I still plan on doing the COT report webinar. I just might need to move it up an hour, but I'll plan on normal unless I let you guys know in the Telegram. Okay, so I need to double check that. I'm sorry I didn't double check before I met with you guys today, but either way, just plan on the normal time unless I let you know in Telegram. So, all right, guys, appreciate your attendance. Thanks for coming, and we'll see you guys in the next webinar.